Hey everybody, welcome to Mortgage Today for Friday, April 19th, 2024. And oh, what a day it was. UMBS opened up pretty much flat, down 2 basis points in the first hour of trading. S&P futures were down 7.25 points on tension between Israel and Iran. Existing home sales fell 4.3% in March to a seasonally adjusted annual rate of 4.19 million. This is down 3.7% on a year-over-year basis. On the bright side, inventory is increasing, rising 14.4% year-over-year to 1.1 million units. The median home price rose 4.8% year-over-year to $393,500. The first-time homebuyer accounted for 32% of sales compared to 26% in February and 28% a year ago. Investors purchased 15%, down from 21% in February and 17% in March. The index of leading indicators fell 0.3% in March after rising 0.2% in February. Over the last 6 months, the index has contracted 2.2%. The LEI's 6-month and annual growth rates remain negative, but the pace of contraction has slowed. Overall, the index points to a fragile, if not recessionary, outlook for the U.S. economy. Come on, recession. Indeed, a rising consumer debt, elevated interest rates, and persistent inflation pressures continue to pose risks to the economic activity in 2024. Homebuilder DR Horton reported a 24% increase in earnings per share in the fourth quarter. Wow. And I'm sure home builder sentiment is down. Home building revenue rose 13% and gross margins expanded 23% compared to 21% a year ago. The home building business seems to be hitting on all cylinders, yet their sentiments suck. I got ideas on that. Oddly, the company did spend $450 million buying back its own stock. When the underlying business is that good, why aren't they plowing that capital back into the business? Return on inventory is 30. Western Alliance reported earnings of $1.6 per share, which was up 20% compared to quarter 4 and 25% from a year ago. Book value per share rose 13.8% year over year to 47.3. Charge-offs ticked up to 9.8 million, which was about 0.08% of average loans. Net interest margins contracted. The overnight session began with a very clear flight to safety in stocks, selling and buying bonds, on headlines regarding increased hostilities between Iran and Israel. There have been plenty of increased hostility headlines this week that have not impacted things very much. These were different because the initial news wires played up the risk to Iran's nuclear sites. Shortly thereafter, the IAEA said there was no damage to the nuclear sites, and Iran said there were no plans for retaliation, despite previous warnings to the opposite effect. With that, stocks and bonds began grinding back in the opposite direction, an effort to continue into early domestic session. Granted, there was a possibility that today could have been a rally day for the bond market, but as seen in the overnight trading session, that possibility depended on the escalation of the war in the Middle East. There aren't many other reasons for bonds to push back too much on recent weakness. One of the only other reasons would be Friday position squaring and short covering, but that would be just as much of an indication of ongoing bearishness in bonds. In that sense, holding sideways is possibly the best victory we could have hoped for today. The fact that we've avoided Tuesday's high yields through the end of the week could even signal sideways vibes until May, at which point data and the Fed will let us know the direction of the next big move. So just as it opened, UMBS closed up 2 basis points at 99.32. So at 99.32, it puts us right here underneath this Fibonacci line at 99.647. All of our trend lines are way above where we're at right now, so hopefully we get some bad news next week to help out with that. It's a weird thing that we live in that world. But anyway, nothing on Monday. On Tuesday, we are going to get our S&P manufacturing PMI. We also get new home sales, which is interesting but doesn't really move the market. We get durable goods on Wednesday. On Thursday, we get GDP final sales. We get core PCE. We get jobless claims. We get GDP deflator. We get quarter 1 GDP. And then on Friday, we get core PCE, some consumer sentiment. So it's going to be a wild week. So let's focus on things that we can control. One of them is a great series that's going on, video series on our sponsor at thatmakesense.com, where it's all about the great Stephen Pressfield's book, The War of Art and Turning Pro. These will definitely give you ideas to be better at your business. So check it out at thatmakesense.com, and also check out our other daily influences, sources, and sponsors.